Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at trading-pennies.com. This week's video demonstrates how to trade a stock when things go horribly right. This week's chart is Thermo Tech Technologies Inc, ticker symbol TTRIF, a company involved in waste conversion and management technologies. What caught our attention in this stock was a long and stable flat channel pattern, in which we began to see volume coming into the stock on the ask, with the stock trading in the upper half of the channel and above a slowly rising and supportive 20-period moving average on the daily chart. As always, we base our entry on the price-volume action at key pivot points using the intraday chart of a 20-day length and a 3-minute period with a 200-period moving average. To this end, what we look for is a volume break of these key pivot points above a non-volatile, slowly rising and supportive 200-period moving average. We saw the 0.0008 price level as the upper boundary of a well-established flat channel and representing a key pivot point in this stock. On late morning trade on March 6th, we saw a volume break of this key pivot point and where we took our initial position. Trading remained quiet for the next couple of days with a successful retest of the prior key resistance now turned support. Volume came into the ask as the stock traded back into the underlying support of the ascending 200-period moving average and where we increased our position. As always, once in a position, we quickly turn to attention to exit strategies by performing multiple time frame analysis, looking for key pivot points amongst the various chart patterns used by the majority of traders. To this end, we saw the natural price resistance level at 0.001 and a prior spike high at 0.0014 on the monthly chart. We also noted an uptrend line formed by the prior highs on the monthly chart, which projected a price target of 0.00125 on the current month's candle. On the weekly chart, we saw a prior resistance which coincides with a natural resistance at the 0.001 price level. We also noted an uptrending channel, the lower boundary drawn off prior lows, and the upper boundary drawn off a line that demonstrates at least 3 prior hits. This gave us a projected price target of 0.0016 and 0.0018 on the current and projected weekly candles. On the daily chart, we saw the development of an uptrending channel, the upper boundary projecting from the breakout high of March 6th. This gave us a series of projected targets that ranged from 0.00125 to 0.002 over the next 4 trading days. How do we derive these targets? The stock pulled back and consolidated over a period of 4 days. Many patterns tend to project future price targets, which are similar ranges and develop over similar time periods. Thus, we look at the price level that would correspond to the projected upper boundary of the uptrend channel, drawn off the breakout high of March 6th. We also noted the development of a small bull pennant with a projected upside target of 0.0022. As noted previously and covered in detail in our manual, many patterns tend to project future price targets. In this case, we take the range of the bull pennant and project forward a similar range from the upper boundary of the pennant. In this case, we projected a range of 0.0007 and added this to the upper boundary of the bull pennant at 0.0015 and projected a future price target of 0.0022. As such, we saw the 0.00125 and the 0.002 price levels as key pivot points in future trading and points where we would closely watch price volume action to determine how we would trade. As noted in our manual, we utilize the underlying support of the 200-period moving average on the intraday basis as our trailing stop loss point. If one of the following rules is violated, we will sell. 1. We will sell our position if the stock breaks and closes below the 200-period moving average on 2 consecutive candles, or 2. We will sell our position if the stock breaks and closes below the 200-period moving average on a single candle if accompanied with large volume. Since neither of these rules were broken, we maintained our position. Going into the close on March 18th, large volume came into the stock and the stock gapped up and closed at our projected key pivot point at the 0.002 price level. Watching the price action on the ask going into the close, we maintained our entire position, anticipating a gap up in the following morning and where we would most likely exit our position. As anticipated, the stock gapped higher on opening trade on March 19th. We normally sell a major portion of our position at the gap open to determine whether we will sell the remainder based on our sell rules as noted previously, or if the low of the initial pullback of the gap is breached. Thermo Tech gave us no choice but to sell our entire position into the run as the stock's price volume action went vertical. As soon as we saw the action on the air showing signs of slowing down, we were out. There is only so long that anything can move vertically against the effects of gravity, and stocks are no exception. To stay in a position that moves vertically like this is the definition of greed. And as we all know, bulls make money, bears make money, and pigs get slaughtered. Trade with your head, not with emotion. Plan your work and work your plan, and most of all know your stop-loss points and execute them. Remember, you can always re-enter a position. Until next week, from TradingPennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.